Fundraising, one lesson learned there has been for whatever you're building, the investors may have a point of view on measuring progress in a particular way for your solution, product, industry, right? So having a good sense of what's right for your business, that comes first without saying. But also sometimes there is a conflict in what might be good for the business and what investors might want to see in the early days. If you look at Freight Tiger, we talked about visibility TMS and then we talked about the marketplace. In our case, investors were very keen to measure the marketplace. But to build a marketplace, you need visibility and TMS in enough accounts. Now there is a conflict, right? Because I'm measuring the visibility and TMS in terms of adoption a lot more than anything else. But if I'm an investor and if I want to fund a company, I'm ultimately going to think about the GMV, the take rate, and the growth in that as well. So having understanding of that is kind of helpful. We were so focused on building the business the right way and what we had to build that we might have almost not paid enough attention to purely from an investor's point of view, what would they like to measure and see. So as you build and it will evolve, a lot of those indicators are there, right? For example, if it's a marketplace, people look at GMV and take rate. If it's a SaaS, people look at ARR, then your gross margins, contribution margin, whatever that is for your business. Just make sure you've kind of internalized it. And no matter what, even if you don't have full clarity, just start measuring it in some ways. And as you talk to investors, as you talk to your customers, evolve that playbook to know what do you need to measure and demonstrate, not just for them, but even for you to know that you're building a valuable business. To me, that was quite powerful to kind of come to this realization, and the sooner you figure this out, it'll be easier in fundraisers. Sometimes there'll be pushback. You might say, I'm measuring, this is your North Star metric, but investor might be thinking about something else. So it's good to kind of understand that, and the sooner you understand it and you build your own viewpoint, it's helpful, because then all of your other strategy will come together to support that for your business. And fundraising will also decide whether you are a company that is going to raise venture funding or you're going to bootstrap it. Whatever it is, it's again good to know, because your strategies will change based on that. And there is no right or wrong. There is enough companies that bootstrapped and build a very valuable business, and there are some businesses that will need venture funding. And personally, what do you want out of your own life and company? Do you want to go into that hyperscale growth, that model? What is the industry dynamic? Sometimes you need venture funding again to scale quickly, rapidly and stuff. So a little bit of introspection and saying, what do you want and need to build your business? And some estimation of how much capital will you need, how will you raise it, what numbers you'll have to build to support that fundraising and valuation. Back of the envelope, quick math to have some of that would be quite helpful. Storytelling, of course, becomes extremely important. If you look at our path, freight is not an industry that everybody is familiar with. It's not something you day-to-day interact with. So telling that story in a manner where it's easy for people to understand, get excited about, matters a lot. And so much of fundraising, frankly, at some point becomes about storytelling. So one is the metrics that you need to demonstrate, and the other is then how well you tell the story.